Welcome back, everybody. Up next, we have a cracking panel. We'll be discussing fintech as a tool for financial inclusion. And to help on this very important subject, we have Bailey Kersar, the CEO and co-founder of Tuco, which is an app that helps people who need support managing money and share that safely with a carer. We also have Norris Koppel, the CEO and founder of banking challenger Monese, and Perrin Fark, the founder of Inspired Human, a specialist diversity and inclusion agency based in London. And last and just as importantly, we have Tom Wolfe, the CEO and founder of EdAid, who will play moderator. So thank you all, and look forward to the panel.
Well, good afternoon, everybody. We were just chatting backstage, and definitely mid-afternoon slump. Bailey's just had her coffee on board, and so we're going to kind of crank up some of the energy here. Plus, everyone here is a true believer, so it gets to be quite exciting. We can push some of the limits of the conversation. It's a real pleasure to be chairing or kind of comparing this panel, fintech as a sort of financial inclusion, and really just kind of kick things off. And I think it's probably quite a leading question, but really what I'd love to be able to explore is to each of you really see fintech as a driving force for good, and where do you see the upsides and the impacts it can have both today in a COVID world, but really as we accelerate through to a post-COVID economy. And I'm gonna hit Bailey with that one first, because I can see you just on my screen there.
I've got my coffee, so I'm ready. So really big question to start with. Thanks, Tom. So do we see fintech as a driver of good or not in the world? I don't think it's possible to say yes. Like any kind of innovation across any kind of industry, there's going to be good examples and there's going to be bad examples. And really, it's just about how do we mitigate the risks around protecting people who are in less well-served audiences. And Monese is a great example of one of those, so I don't mind to go on to that. But yeah, for me, I think it's important as innovators to really keep asking that question: are we doing good in the world? Are the things that we're doing actually missing out on helping a chunk of the population? And how do we help those who might be left behind because they're not digitally included as well? So that's my opening gambit.
And Norris, listen, you've probably got the biggest customer base out of all of us. You've seen this play out a number of times and have been the biggest driver of really access to basic financial services in the UK for so many citizens. Tell us your insights. I'd be fascinated to hear your take.
Yeah, absolutely. I think from the perspective whether fintech is good or bad for specific underserved audiences, I would say from very own personal perspective, definitely we're a driver of good. When we look at banking, for example, then historically banks have been very clunky, and especially if people are from abroad, for example, being excluded from basic stuff like accounts just doesn't make sense in this modern era anymore. So I think fintechs, banking services like ourselves, for example, who just make things easier, removes this friction. I mean, this cannot be seen as a bad thing. And especially when we look at today's sort of a COVID world, people are more fragile than ever before. We're looking at gig workers, key workers, these people, Uber drivers, for example. In many instances, if people are struggling with basic things. So, I mean, if we can help these people, and we are right now, in terms of onboarding and saving money, and millions of them, then in my books this is a great thing. And I would like to think that when at some point hopefully everybody in this world will be properly sort of banked and have access to financial services, then this is not the end of it, but we as companies who are focusing on addressing these problems will actually have a significantly more offer than just access.
Perrin, talk me through. I mean, a lot of your business is around advising companies on diversity and inclusion. What have you seen both as a consumer and as a business leader in the power of fintech, particularly around financial independency in the home, in the workplace? I'd be fascinated to hear your thoughts.
Yeah, Tom, it's such a great question. Thanks for asking. And, I mean, I want to start by addressing the elephant in the room. So this has been the year of, yes, COVID, but, Black Lives Matter. I mean, this has been the year of Black Lives Matter. It's been kind of on the, front page of almost every publication this year, everywhere. And so I think this year, 2020, will be remembered as the year of COVID, lockdown, and, Black Lives Matter. So what does it mean from the society? I think if we look at the society today, the society is more aware than ever before when it comes to, inequalities in the world. And I think, how does fintech fit into that? How do fintech organizations fit into this changing society, rapidly changing society? I think fintech plays a huge role because, we live in a COVID world, people are at home, and more than ever before, they need, their phone and their app to use their financial services. So I think fintech organizations that really prioritize diversity and inclusion, they can create more innovative solutions to create products that serve that diverse user base. And we know that innovation comes from diverse voices. So the more diverse innovation, the more diverse engineering teams are, the more diverse the fintech products that they build are going to be, and the better they're going to be able to serve that diverse population in society. So for me, I go back to, I think fintech can be a great thing for society as long as fintech leaders prioritize diversity and inclusion from we want to serve a diverse population, we want to serve a diverse user base. And I think from that perspective, yes, fintech can be a great thing.
Cool. Bailey, listen, I know you have your finger close to the pulse than probably anybody on the best examples. You advise others on how to build, and you've got your new labs that you've just launched recently. And so I'd love to really think about where you're seeing people doing great work. It doesn't have to be on a big scale. It can be small stuff that you think has got the power to really drive some change.
Yeah, and there are examples across the industry. So we're really lucky to be in an industry that embraces, for the most part, the kind of innovation techniques that you see in tech companies. So things like inclusive design principles that we can use. So we bring people along on the journey as we go from nothing to having a design and a product in people's hands. So yeah, some of the great companies that I've met and talked to, there's WageStream. They're putting salary advances in the hands of people in this really difficult time when people are struggling during the COVID lockdown. We've also got companies like Monzo. They're often cited by banks as really leading the way in a lot of features that are appropriate for what they call vulnerable customers, so people in more vulnerable groups. You've also seen over the COVID crisis, companies like Starling, they have been record-breaking in the amount of time they took to get money into business hands, so the government loans. So there's been really some great examples over the last kind of 6-9 months around how companies can respond and bring in really good, relevant products and services.
Cool. So while I've got you there, and let's push this needle a bit further. Who's not doing it well? There's no shame here. Name names. Call people out. Absolutely. But where do you see it? Where is the ability for this to become Zuckable? Where does it stop in terms of people start to say, actually, now I have your data and I can add credit products onto credit products. So I'll take your credit card and I used to consolidate it. And now I'll add you salary finance on top. So you're going to be paying for an extra loan on your payroll deduction. And I'm going to give you WageStream on top. And I'm going to give you an interest-free overdraft, but not quite give you a clear idea about the fees. And so what you have to tend is the underserved tend to get hit hardest with those charges. I'd love to see where you see that hitting and where perhaps it's gone too far the other way.
And it's not just about charges either, it's about accessibility. So we talked about inclusion and making sure that we have a diverse team. Well, that just goes beyond people's ethnicity. We have teams where they might not consider that someone doesn't have access to a smartphone. They might not consider that you're in a rural location and unable to get to a branch. These kinds of difficulties that lots and lots of people in our country and across the world actually have to struggle with. I'm not going to name names as to who's not doing a good job, because I actually think it's not about that, right? What it's about is how we can make sure that we're not building for one specific group above all the others. And unfortunately, I suppose, on the whole, companies in this country are set up to optimize profit and therefore potentially go after opportunities that offer that opportunity, like the famous example, which was Wonga, probably the biggest example of fintech prior to kind of the 2015, 2014. And that's an example where the regulator stepped in and said, no, this isn't okay. But it took years for that to happen. And technology can be used in that way as well. So we shouldn't forget that.
Norris, kind of jumping across to you, I think I'm always inspired by the transparency of your model around your different products, the pay-for-play products as well as the kind of free products. And so I think your level of transparency makes that inclusivity. And so I'd have you down as a great example where someone knows that they're paying for a product. I'd love you to kind of build upon why you were so different and were able to stand tall separate from everybody else.
Yeah, I guess our focus always has been really making things possible for in places where they haven't been possible before. So we started back in the day from making onboarding incredibly easy. So mobile device only. You can be from Europe, living in the UK. You could get an account with us in 2 minutes time, which was completely unprecedented at the time. But things have moved on, obviously, and sort of the development in sort of onboarding world. There are many companies who are now providing this out of the box as a service. Has made things much easier for everybody. And I think the next frontier is really, apart from obviously pricing transparency, where companies like TransferWise, for example, has been for me personally massively kind of like a shining star, where they introduced this pricing transparency back in the days that we have tried to emulate. But I think if we go into kind of the next frontiers, and we have one example that we just launched a few weeks ago. We launched a partnership with Proxy Address, which enables those people who are homeless in the UK as a trial right now to get a banking account, even though they don't have an address, which is something that traditional banks require for you to have in order to get access to finances. Things like this are, in my view, incredibly interesting. And then, looking into, you mentioned Wonga. So I think the next frontier really is to make sure that those people who are kind of in those either low income brackets or who can't get access to traditional loans, for example, or credit products. So how do you make things possible for those customers, maybe thanks to open banking, maybe just a smarter way of looking their transactional history without relying on consumer credit reports, which is what big banks right now use. So I think this is going to be incredibly interesting in the next sort of a year or two. And there are many players already who are looking at this opportunity, but it is very challenging. Open banking definitely is going to help there a lot.
And Perrin, if you had a magic wand or your request for startup or innovation in this space, where would you be going for that? What would you be looking to and asking people to build to solve some of the problems that you're seeing on a day-to-day basis?
Yeah, again, such a great question. If I think about the fintech industry in particular, I think, I won't surprise or shock anyone when I say that, we know the fintech sector has a diversity problem, right? So, I was looking at the latest stats from the British government. If we look at the UK fintech, 83% of fintech executives are male. Women are just under a third of total staff in the fintech sector. And if I think about someone like Bailey, who is a female founder, that report from the British government found that female founders were struggling to raise capital with some unconscious or unconscious bias, against women-led organizations. We're not sure, but yeah. So there is a lot of work to do in terms of bridging the gap, the gender gap, but also the race gap in fintech in the UK. So if I had a magic wand to answer your question, what would I do? Well, I think, it's all about education, right? Whether it's education through, speaking engagement, workshops, trainings, awareness, webinars, and so on. I think, I always go back to, if I think about fintech business leaders, I think it's articulating how diversity and inclusion will impact the bottom line. It's not a nice to have, it's not a moral imperative, it's not the right thing to do, it is good for business. And I was trying to summarize, if I had to summarize kind of, in a really short way, why is it good for business, diversity and inclusion? I'd say, so one, and I love how Bailey talked about, hidden disabilities, because if you think about neurodivergent individuals, people with autism, Asperger, etc., or other hidden disabilities like this. So actually, hiring neurodivergent talents can really help fintech companies prevent malware attacks. So we know that, an impressive 98% of fintech startups are vulnerable to phishing, web, and, mobile application security attacks. And neurodivergent individuals have been recognized for their above average talents in IT and particularly in cybersecurity. So neurodivergent teams are actually better at spotting patterns and recognizing patterns when it comes to attack and malware attacks. So that's one clear business benefits for fintech, by hiring neurodivergent engineers, you're better at reducing cybersecurity risks. Another advantage is by building an irresistible, diverse brand, you're going to compete better against those large financial corporations, because, fintech are competing against, the big giants, Goldman Sachs, Morgan Stanley, Credit Suisse. And we know that brands that show a diversity of cultural groups in their advertising see a better perception amongst their consumers. So by investing in diversity in their advertising, fintech startups can compete better against the big giants. And a third business benefits for fintech to invest in diversity inclusion is to by hiring diverse engineering teams, they can really boost innovation. We know that innovation is driven by an intersection of different voices. So the more diverse your engineering team is, the better you're going to be at innovation, which is obviously strategic for a fintech. And the last advantage, which I think is another very important one, is by diversifying your sales force as a fintech company, you're going to win new customers, because if your workforce is more diverse, they're going to better understand the needs of a diverse population, diverse users, diverse consumers. So you're going to have a competitive advantage. So it's a long answer to your question, Tom, but I think if I had a magic wand, I would really articulate the business advantages for fintech leaders, why they should prioritize diversity and inclusion, because it's good for business.
Well, thanks, Baron. Bailey, I think I'm just going to get some free consultancy for the audience out there from you in terms of what you do. I think that in this new world of remote working for a number of people, diversity and inclusion, to take Perrin's point there, becomes a much harder challenge when people are trying to break into the industry, because they effectively don't have the ability to be able to get the exposure early in their career. What are you seeing there, and where do you think the fintech sector can particularly be an accelerant to change in that space around being able to get people from non-traditional backgrounds into the financial services industry, but also make sure they get the exposure when they're not in the room?
That's a really good question, and one that I haven't given a lot of thought to recently. It's been a really tough year for lots of companies, and in fintech, I don't know that many companies that are hiring. And that even compounds the issue, because you've got people with little experience who want to maybe get into the sector and learn a bit more, but it's hard because we're working remotely and because jobs are a bit more scarce. So yeah, I don't have a great answer for you. I used to run a fintech meetup, and that was a really great way to learn more about the industry. And I know that they're still run, but just online. So that's a really good place to start. If you're interested in the kind of tech for good sector, so you're tuning into this financial inclusion one, there's a great tech for good meetup that I'm a part of, for example. But yeah, I think for people just starting off in the industry, it's about finding a contact, reaching out to people who you respect and want to learn from, and asking for tips. It might just be a book that you can read, or having a virtual coffee, or referring them on to a group that might be useful. But that's certainly how I got into the industry 10 years ago. And I'm very grateful for the people who had patience 10 years ago, because now I'm doing the same thing back for.
I think all of us as founders, and it is a really tough landscape out there. I think all of us as founders will have to recognize that over the coming years as to how do we ensure that there isn't an access gap for people that are within our companies or trying to apply because of that. I think, Norris, you have 400-500 employees now. I think you're kind of super fast growing company. But yeah, I'd love to push on you, because obviously you're the big boy in the room, so to speak, around like open banking was obviously an example of forced regulation. It's something that the big banks and the Payment Services Directive made happen. the previous panel kind of alludes to the fact it wouldn't have happened without the forced regulation. In terms of, the big banks have only done it because they've been made to do it. I'd love to think about not only your thoughts on open banking as that, but also more macro, where else can we be using forced regulation to drive inclusion and innovation?
Yeah, that's a good one. In terms of open banking, you're actually absolutely right. I mean, none of this would have been possible because big banks really didn't want to open any doors, right? And it was pretty challenging. And but thanks to opening these doors slightly, guys like us can actually now access data. And I'm hoping also that decisions around credit, for example, are going to be very much easier for smaller companies like us, thanks to these sort of forced regulations. So this is a good example of what regulation has done for us right now. But I think it would be difficult to find other regulations like this. So maybe we talked about Wonga earlier. So I guess kind of really capping the interest was really a good one, because having been in the lending landscape during the Wonga days as well, I saw clearly that this went horribly in the wrong way. So without this sort of a forced regulation in the UK and perhaps in the US as well, God knows where we would be right now. But now it's welcoming to see that as a result, many bad players have left the market. To be honest, I think 80% of that sort of bad behavior disappeared in the markets, in the UK market when regulation changed. But right now, I mean, I would find it difficult to find where else forced regulation could come in.
Do you think we're over-regulated as a banking startup, as a kind of neobank? Are you over-regulated? Are you too shackled? Are you not able to kind of flex your wings enough?
I wouldn't necessarily say that. I think UK is actually in a best possible place, having seen regulations in other countries as well and jurisdictions. I would say UK is actually plain sailing compared to other countries, and so that would be good. I think again, if you go to Europe and various European countries that have been maybe a little bit slower compared to FCA in the UK. You are forced to go through so many different kind of hoops. So it's actually quite sort of a demotivating. So that I would say is something that probably will change in time a little bit. That said, again, when we look at what's happening around the world right now and people putting up balls all over the place, that actually is a little bit maybe even negative sign when we look at what's happening in the financial services industry as well, where similar things are actually happening. I'm not talking about the wall in the US right now, but in the financial services sector is also somewhat happening. So I would not say this is a great thing, being in trying to be an open-minded company and opening up the barriers. So this is definitely going somewhat in a wrong direction.
Sure.
Well, sorry to interrupt everybody. Really, really fantastic session so far. There are a few questions which I'd love just to bring in from the audience. One actually is from Aisling Finn, a reporter at AltFi, which I think is a great question. Just to sort of play devil's advocate, really, I suppose. Does fintech exclude anybody? And what can be done about that in terms of, I guess maybe the decline of cash, smartphones. I think people mentioned, is there maybe something that needs to be thought about along that line? Also, just as a sort of separate part to that, really, but just to also ask at the same time, are VCs becoming more interested in financial inclusion fintech? Bailey, perhaps you want to go for that one?
Yeah, I'd love to. So first on the point around exclusion, personally, I think it's really important when we think about financial inclusion to start with, what does it mean to be financially excluded? Because inclusion sounds kind of fluffy and people often just go straight to, okay, do people have a bank account? Can they get a bank account? Yes, they're done. Good. But actually, financial exclusion is so much wider than that. It's about all the different products and services that you might need access to throughout your life, through different circumstances. If you're in different circumstances personally as well, if you're disabled or ill, it's also about the access that you might have to those products and services. And when you think about, if you can only access something through a smartphone, that's not accessible to some people in the population. Equally, if you can only access things in a branch, it's not accessible to everyone in the population. So you can't win. There's no like one size fits all. We're all different. We're a population of 60 million people. So financial fintech people need to be thinking about that. Some of the really big issues, I think, that we've seen coming up are, as you alluded to, access to cash. So although in COVID, people using cash has gone down dramatically, it's still relied upon by lots and lots of people in more rural areas or in different demographic sectors. It's also relied upon a lot by small businesses in more rural areas in order to take payment, and they need somewhere to catch up at the end of the day. And branches are shutting at record rates. So there's a gap there that really needs to be filled. And some other countries are doing really interesting things about how you can bring some of that digital service to people in remote areas. But in the UK, I don't think we've quite cracked it. Another thing that has been really well looked at by the Money and Mental Health Policy Institute, who I've done some work with, is how new methods of payment and paying online in particular in the last 10 years has really increased people's propensity to compulsively spend. And that has really impacted their mental health, but also their finances, and increased problem debt in some populations. And so introducing more friction into our design when we're thinking about kind of products like Monese, and Monzo and Starling have done this as well. I'm sure Monese has as well thought about it in terms of introducing a bit more friction. How do I lock a pot of money so that I can't spend it right now? How do I have a cooling off period on a loan? Or how do I make sure that maybe a gambling block is applied to actually other kinds of merchants as well? So these are some really practical things that I think we'll start to see over the next few years. But to the other question, the one about VCs, there isn't always a commercial incentive to do these things. And so often it's about, with these bigger companies doing work around financial inclusion, about their brand and their reputation. And I think that's going to be really important over the next few years, as the younger generation who really values that kind of brand and perception and reputation piece, they're coming up, they're looking for these types of products and services. They don't want to use something that isn't going to be inclusive. And I think that's going to be where we start to see the commercial incentive coming in, when you have people who are really looking out for that brand of that seal of approval. And just to answer the VC question directly, yes, there are VCs who are really interested in this area. Again, it's about finding ways that we can fund different types of research and innovation. And at Tuco, we've been really lucky to have some grant funding to fund that research, because we had to start from scratch, and it was a lot of work that we did with charities. So, actually, it's not just about VCs; it's about a wider perspective in the industry, I think.
Perrin, there's a question which I think sort of goes further to one of your points, but obviously you outlined some startling statistics around fintech and diversity inclusion. Would you say though that fintech can sort of claim that it's sort of ahead of the curve in some ways? I mean, is that, I guess what I'm asking is, how does it compare to, the benchmark? I don't know what that is, but the national average, or other industries, or perhaps traditional financial services?
Yeah, it's a great question. So how does fintech compare to the rest of the industries in terms of diversity? So whilst I don't have the exact stats for the other industries, what I know for sure is that tech in general, including fintech, has a big diversity problem, right? So in other words, I believe that tech and fintech are still behind where they should be. And so, we talked about the stats, 83% of all fintech executives in the UK are male. Women only represent a third of the total staff in fintech in the UK. And female founders are still struggling to raise capital, whether that's conscious or unconscious bias, we don't know. And the issue with that is that as long as the workforce doesn't represent the entire population, what's going to happen is we're going to continue to build products that are built by a certain part of the population for a certain part of the population. And unfortunately, we're missing out on all the others. And so, if, for example, in the UK, the UK population is made up of 50% female, 50% male, right? If in the UK, we've only got basically 83% of fintech executives are male, what does that mean? That means that the majority of the decisions that are being made in fintech do not represent the whole population, and therefore the products that are being built, the services that are being delivered, etc., do not fully include the whole population. So we're missing out on a part of the market. So, and for me, it's the message I want to articulate is that it's a business benefit thing. It's a business advantage. And I think there is this idea that diversity and inclusion is, the right thing to do, or the charitable thing to do, or the moral, thing to do. However, I disagree with this. I think diversity and inclusion is the secret, weapon to be successful in the market, because if you have a diverse workforce, you're going to build products that are made for the entire population. You're going to better understand your customer base. You're going to be more innovative, more productive, etc. So it's a long answer to your question, but I believe, in short, to answer your question, I still think fintech are behind. There's still a big diversity problem, and I think the key I believe is for the leadership team, so for the leaders to prioritize diversity and inclusion, and for them to see that as a competitive advantage, and then do the rest, so set goals, etc. But I think it is possible. It's just articulating the business benefit for the business.
Great stuff. Well, really, really appreciate everyone's efforts. I'm afraid we're going to have to sort of leave it there. It would have been great to cover a few more questions, but perhaps that can be picked up in the hop-in chat if anyone is keen to do so. Ed, Perrin, Bailey, Norris, thank you very much. That was a great session, and hope to see you the rest of the week. Thanks a lot.
Thank you.
So we're just going to go to a very short break, but we'll be back to discuss very, very briefly in 2 minutes the next decade of disruption with Nick Ogden.